You guys are a value shop looking for stocks that are, trading at a discount or been left behind. So what are some of the names right now that seem appealing?
Great. Yeah, we are. We are value. We're looking for value. We think that's where you need to go. It's been such a long stretch of time where it hasn't worked well. But, we're looking at, we've mentioned three stocks. Discovery Communications, we think, is incredibly attractive right now, has a amazing moat around it. We like Walgreens. We like Amgen. Those are three stocks we think offer great value right here.
So Discovery, arguably Walgreens too. I mean, one of the reasons presumably for them trading cheaper than the market at this point is concerns about big structural issues. They're kind of caught maybe in the wrong side of an industry. So how do you get around that idea when it comes, for example, with Discovery?
Yeah. Well, though, that's a great observation. That is definitely been a wet blanket on these stocks, which has caused someone like us to be able to wake up and able to buy them at like Discovery at a eight times forward multiple, price to earnings multiple, and it's 16% free cash flow yield, for example. So how do we get around it? The answer is Discovery Communications. If you listen to what they say, 45% of the stuff that gets watched out there is non-scripted television programming, right? So there's a whole slew of people out there, Disney, Netflix, Amazon, spending all the money that they can on Hollywood scripted programming, but 45% of what gets watched is non-scripted television programming, and Discovery owns that segment. And it's incredibly profitable as well. They don't have to pay the actors and actresses to do it. And they have passion channeling. They have, things that people tune into, and we think they have a substantial moat around what they're doing. And by the way, they generate $3 billion a year in free cash flow with the new combined companies. They bought Scripps Networks about a year ago. We think they're on track to do extremely well here.
I do want to make sure we get to Amgen too here. What's the quick premise there, and does the changing of leadership of the FDA have any implications for it?
Yeah, Amgen is just way too cheap for what it is. What it is one of the world's best biotechnology companies who's had a history of trading at, glamour-type multiples, and right now you can buy it at a little more than 13 times forward multiple. The quick story there is that they've got 6 or so, 7 legacy drugs out of their 15-plus branded pharmaceutical products out there that are coming off patent and having generic competition coming their way. And so they've got to replace that. They are doing a good job of that. It's going to take a little while to really get some top-line revenue growth going. But, things like Repatha have had double-digit growth since 2015 when they launched that drug, or Aimovig, this amazing migraine drug, is doing extremely well. So they've got some really good stuff in their pipeline. And by the way, they spend 20 cents out of every top-line dollar that they make on research and development that they expense each and every year.